welcome to Digital Bharat Series by ETBFSI. In today's episode, we are joined by the Managing Director and CEO of Indian Overseas Bank, Mr. Ajay Kumar Srivastava. Indian Overseas Bank has been an integral to country's financial growth, and as the bank charts its course through a rapidly evolving banking landscape, we speak with its top leadership to understand the bank's performance, digital roadmap, credit growth strategy, and its future outlook. Hello, sir, and welcome to the show. Sir, let's begin the conversation firstly with the digital aspect. So, my first question to you is that we would like to understand from you that how the Indian Overseas Bank is aligning its digital strategy with the broader vision of Digital Bharat, because we have seen that government has also been very vigilant and active towards the Digital Bharat goal, and a lot has been done for the banking sector as well. So, what is your view on this?
Yes, so of late, we all have seen, we all have witnessed the penetration of digital infrastructure and all variants of digital products and services entering into everyone's daily life, and banking is no exception. And since banking touches the lives of almost everyone in the country, right from the vegetable vendor to the top bosses, number one or number two, the big industrialists. Banking touches everyone's lives, be it school fee, be it electricity fee, or be it lending. You know the drill. And in all these aspects of banking, digital has been playing a very, very critical role. The way banking was happening, the way customer onboarding was happening or lending was happening, maybe 5 years or 10 years before, the entire work process, the flow, everything has gone to sea change. And since we have been witness, we have been in the industry for almost 35 years, we have seen how banking has evolved. And last 8 to 10 years, it has been phenomenal. In fact, it has changed at such a fast pace, and it is still going on changing. And of course, at the end of the day, it is for the betterment of the industry as a whole, and for common public at large, and for the nation also. So you name from customer onboarding. No, it's not only products and services or those things which are customer facing. Inside the bank also, the systems, the procedures, the internal office things, everything has gone a sea change, and digital transformation has happened at all levels, at every level. In fact, the board meetings, the various committee meetings which used to happen earlier, where 80 pages, 100 pages agenda items used to come on the table in physical form. Everything has got digitized, and it is on iPad, and the entire meetings, entire committee meetings, taking very big decisions also, it happens without a piece of paper. It's all digital, getting recorded. So it has transformed everyone's life. Banking is no exception. And whatever the ecosystem demands, or whatever is happening in the ecosystem, digital ecosystem, banking ecosystem, IOB is in the front. And for all product services or all the priorities of the government of India, I can very proudly say that we are there, and we are there with very successful and effective contribution.
Very well noted point, sir. Now let's talk about the financial inclusion, because if we look at the last decade particularly, then government has also been very vigilant in terms of financial inclusion through Jam Trinity and the other, and banking the unserved basically. That is the vision that we are having at this particular point of time. So could you tell us that what role IOB is playing in deepening the financial inclusion, specifically in rural and semi-urban India? Like, you have any particular vision or plan that you would like to share with us? And second is that how the banks in general are leveraging the Digital India mission to reach the unserved population, as per your opinion.
Yes, so we all know, in fact, this the entire concept of financial inclusion started on an aggressive note with introduction of PM Jan Dhan Yojana in 2014-15, and after that, lot many products have been onboarded. And the emphasis has been that the banking services should reach where banking services was not there earlier. All unbanked centers, all families, all individuals who were not part of the formal banking system. The concept of financial inclusion was that. And we at IOB, we do not see it as a social service only. Based on last 8 years or 10 years of experience in in handling various schemes and products of financial inclusion, I can say with certainty that it is a very profitable business. Of course, social service is there, and the people who are out of the banking purview, they are being brought into the formal banking. But at the end of the day, when you look at the entire journey, I can say that it has been a very profitable business also. Why? I will say that first 2 years there was a focus only on customer onboarding. Under PM Jan Dhan Yojana, accounts were supposed to be opened. Even zero balance accounts were opened, mostly were zero balance only. But as on date, when we look back in those accounts, for IUB only we are having around 4,300 crores of CASA deposit. And CASA is like gold, everyone knows in the system. So all those accounts which no one bothered about those accounts, and we never imagined that this type of deposit will flow in, and accounts are running very well. And similarly, on lending side also, all products of the government which were meant for financial inclusion have been doing wonderfully well. There were three, four, I will say, pillars of financial inclusion. One was, of course, account opening, bringing them back. Second was remittance or lending to them. Third was pension, social service. That came in the form of APY and Atal Pension Yojana. That pension scheme also is going robust, and uh, huge number of, I can say, huge success we have seen on that front also. Then there was insurance scheme, Jeevan Jyoti Yojana, Suraksha Bima Yojana at a very low premium. So the entire gamut of financial inclusion, if you see, right from bringing people into the financial ecosystem, giving them pension benefit when they reach the age of 60, or accidental insurance or life insurance. All these things have not only transformed the lives of those people who are not part of this at rural semi-urban centers and those geographies where banking was not there. So it has helped a lot, not only to those people, but the banking sector also, the entire financial system, I will say, as a whole. And we, of course, are actively part of this. And whatever budget or numbers or expectations are there from the concerned ministry or the government, I can say proudly that quarter on quarter, year on year, we have been crossing that. We are one of the best performers as far as financial inclusion parameters are concerned. We are having almost 11,000 numbers of banking correspondents spread across geography where we are not having brick and mortar branch. We have engaged banking correspondents, almost 11,000. And this year, the intention is to take this up to 15,000. And those banking correspondents, they have been given a tab, handheld machines, and through that 36 different types of activities they can do at the doorstep. The people in the villages, they are not supposed to come to the branches. That handle with that machine only, depositing money and withdrawing money is the primary thing. Other than that, also the remittances, the insurance payment, checkbook request, even KCC lending, all these things BCs can do at the doorstep of the villagers. And this concept works very fine because the brick and mortar branches, they are having holidays or Saturday, Sundays. But these BCs with those machines, it's a bank on the wheels. It is 24 by 7 available in the village by one of the villagers only. The same village person is the BC. So it is working very fine. It's a boon, I will say, for all concerned, and we are actively participating in that. And The intention is to take this to the next level, of course.
Well, thank you, sir, for highlighting these crucial aspects in terms of financial inclusion. But I have one follow-up question on this particular topic. Like you mentioned about the banking correspondent and how people coming from the lower of the pyramid are accepting the services. But just want to understand more from you on this because banks and financial institutions are coming with new tools and techniques, making it easier for them. But if we look at the broader picture, then banking services is something that still runs on trust and specifically the customers because there is some sense of uh, I won't say insecurity, but still some sense of that feeling that okay, where I'm putting my money or whatever the processes that I'm following is in a safe and secure ambit or not. So, what is your observation on this, specifically for semi-urban and rural people? Are they are happily accepting it, or do you see that still there is some scope of digital literacy for them because the banks and financial institutions are launching the products, bringing more and more services for them? But are they much adopted to them at this point of time? Or more work needs to be done?
Yes, see, it's digital acceptability is there at all levels. Of course, as compared to metro and state capitals, at rural and semi-urban centers, everyone is having a smartphone nowadays, but using it for banking services at rural and semi-urban centers, I will not put them at par with metro and state capital urban centers. There is certain lag. But having said that, even at metro centers, I have seen that people of, I will say, of my age broadly, despite having that digital literacy and very depthful in handling the banking requirements over mobile phone or net banking, still many people they still prefer to go to the branch and talk to the counter person across the counter or some passbook entry or something. These things do happen, but not for youngsters. And I will take this to one step forward. Also, there have been discussions about brick and mortar branches being not of much use or going forward they will be extinct. Uh, I have to say, based on my experience, is that it is generational. The next generation, my sons and daughters and the millennials or Gen Z we call, when they will reach at our age, or I will say that the people of our generation, when they move out, the next generation, of course, will be everything on digital only, and I do not see them visiting branches. But till the time this generation is there, I think brick and mortar branches will be there, and people will be using the digital things, but with a pinch of some salt or with some sort of I will not say that they will be, I will say, skeptical of its efficacy, and particularly because lot many digital frauds and mule accounts and all these things have started happening of late. That has also created a dent in the belief system of the people on in digital banking type of things. But I think another 15 to 20 years, when this generation moves out, the next generation will be absolutely 100% on digital. And then whether it is metro or rural or semi-urban, it will not make much of difference. Banking will be on mobile and net only.
Well, very, valid points have been made by you, and I think we'll be very eager to look at how the banking ecosystem is transforming in the coming 2 decades down the line. Well, so let's move to some of the numbers because recently you have released your Q1 results. So we would like to touch upon that aspect as well. So you can, divide your answers in the Q1 analysis as well as quarterly analysis as well as the year-over-year analysis while giving the answers. So to begin the conversation on the performance of IOB, my first question is that could you walk us through your net profit and what sectors, according to you, like, has contributed most to this surge according to the results that has been just released?
Yeah, so first thing is it's not a surge. It's a regular activity, and if you see the profit numbers of the bank over last 8, 9, 10 quarters, you can see that there is consistent growth. Every quarter has been better than the previous one in most of the parameters, and the same applies for profitability also. So March quarter profit was 1051 crores, March 25, Q4 of last year. And then this quarter, June, which we declared result yesterday, we have improved upon over 1051 by almost 70 crores, 60 crores, and we have shown a profit of 1111 crores. So it's not such that it is one time. That is what I'm trying to say. It's consistent, and it is consistent based on very strong fundamentals and very sustainable business model. And because of that only, it has improved to this level. And going forward also, I am telling you with complete confidence that going forward again, it will be up only, unless until, of course, no one can predict anything. But whatever we can see, and the strategy and the plan which we are having, consistent growth will be visible across quarters, not only net profit, but all those ratios, all those parameters which matter to the financial world.
And sir, what is your take on net interest margin? Like how you have improved your NIM, and what is your outlook for the margin sustainability amid the rate changes that are happening in the recent past?
Yes, so there is some pressure on margin. A reduction in the repo rate started from February, if I am correct, and from February till June or July, I think 1% repo rate has already been reduced. And since entire retail and MSME portfolio is linked to repo, the moment repo rate is reduced, automatically these loans get repriced. So impacting your interest income. And for IOB, almost 52%, 53% of the portfolio is linked to repo. Meaning thereby 53% portfolio, credit portfolio of my bank is yielding 1% less interest income because of reduction. And when interest income is getting reduced, then naturally there is pressure on margin, and NIM will come down. That has already started happening. It is visible. And yesterday we clocked over 3.04 is our NIM. And I think it will take another 2 quarters because we have started reducing our deposit rates also to match the reduction in interest income. But that impact will come with a lag. What happens in credit, the entire portfolio gets repriced immediately. But for deposit side, the existing deposit rates are not affected. Only those deposits which are going to be contracted now, the fresh deposits, only those deposits will be at the reduced rate. Whatever has been contracted earlier, that applicable rate of interest will go. So there is lag, time lag. I think 2 quarters, maybe Q3 or Q4. Certainly, NIM will get stabilized, and we will be back to around, I think, 3.2, between 3.2 to 3.25. That is our estimation by end of this financial year.
And sir, what is your current CASA ratio and how you are planning or strengthening your CASA base?
CASA has been a challenge for the entire industry, and I am very happy to say that for last almost 6 quarters, we have been maintaining our CASA ratio around 43 to 44%, despite increase in term deposits, and in absolute terms also CASA is growing. So despite lots of challenges as far as CASA is concerned, the satisfaction is that we have been able to maintain. In absolute terms, we are growing. Year on year, we have grown by 15% in CASA. And the strategy behind this is one simple thing is that onboarding of new customers. We are very aggressive on that front. And I will share a number with you. Last 2 financial years, we onboarded 65 lakh new CASA customers. And those 65 lakh new CASA customers have contributed almost 22,000 crores, 20,000 crores of CASA fresh deposit. That 20,000 crores of CASA deposit is freshly mobilized. And in this quarter, Q1 of this financial year, we have opened around 5.5 lakh CASA customers onboarded. And in these newly opened accounts, we are having a CASA balance of 3,200 crores. So that is one of the major strategies that onboard new customers, that brings fresh deposit in the form of CASA. And in addition to that, the existing accounts which are inoperative, or some government accounts or trust accounts, club accounts, that is another strategy on which we are working, and for us it is working fine.
Great to know that, and thank you for sharing all the crucial numbers with us. Sir, another thing that I would like to understand from you, that if you can share that what was IOB's capital adequacy ratio, and is there any capital raising plan that you have in your mind that you can share with us?
Yes, so yesterday we declared CRAR of 18.26%, if I'm correct, 18.26 capital adequacy ratio against mandatory requirement of 11.5. So we are well capitalized. And to ensure that we are growing at around 12, 13, 14%, credit growth has happened. And if we continue to grow at 13 to 14% of credit for next 3 to 4 years, this capital is sufficient to fund that growth. 18.26, this additional cushion of capital. So for growth, we do not need capital. The existing capital is sufficient to take care of my growth of next 3 to 4 years. But having said that, there is a provision that the holding has to be reduced to 75%. Government of India is holding at now it is at 94%. So to meet that requirement, of course, we will be going to the market. In last financial year, in the month of March, we raised around 1440 crores by way of QIP, and with this raise of capital, the government of India holding came down from 96 to 94%. As of now, it is 94. This year, we are planning to raise 4,000 crores. We have already taken board approval, and we are in the process of getting other approvals from the various authorities. And if we do this 4,000 crores, the holding of government of India will get reduced by another around 4%.
Okay. Also, sir, are you seeing any improved traction in term deposits? And the second question is like how you are managing the interest rate sensitivities in the current environment.
Yeah, interest rate, since on the credit side, reduction has been there, repo has been reduced. Last week we reduced our MCLR rates also. So naturally, in ALCO the discussion happened, and we reduced the rates on deposit side also. So that is one way of doing balancing, and to ensure that interest rate risk is not there. And the second aspect is that, of course, low cost deposit, that is CASA, and which we are maintaining at 43%. And CASA means current account, there is no interest payment, it's free. And SB nominal rate of interest of around 2.5, 2.6, depending on the balance. So these two aspects, and the other thing is that we never believed in bulk deposit as part of our active business strategy. So our retail term deposit portfolio, retail means less than 3 crores. That is around 52% of my total deposit. CASA is 43. So almost 95% of my total deposit, 95 to 96% is stable and well spread out. It's not bulk, it's not institutional. And the remaining 4% only is bulk, and that too we take it for short term to manage the day-to-day operations, or if any mismatch is there. The same strategy, I will again say that it is working very fine for us. Retail term deposit, we have grown by 11% last year. Good growth we have shown. I think the same strategy will follow going forward also. And as we discussed about NIM and interest and margin, I think we'll be able to manage it successfully.
Great. Thank you for sharing. And also, sir, what would you like to share that what is the level of your current gross and net NPA, and how are you managing the stressed assets at your organization?
Yes, so distressed assets, there are two aspects of it. One is fresh slippages. We call SMA 0, 1, 2 potential NPA, and which finally turns into NPA. So last 2 years, we have been very effective in controlling slippages. In this quarter also, the Q1 of this financial year, our slippage is only 254 crores, if I'm correct, around 242, 254, I think. We are having a credit portfolio of around 2,65,000 crores. Out of that, a slippage of 254 is hardly anything. Slippage ratio 0.10, and we have been consistently maintaining it over last 2 years. So that is one part of it, that it shows that the underwriting skills, the capabilities, the quality of underwriting is good, the choice of borrowers is good, and proper monitoring is there, effective monitoring is there, so slippages are not happening. That is one part. And the second part is whatever has already slipped into NPA, how we are recovering. Last 2 years, we have been consistently doing recovery of around 4,700, 4,800. This year also, we are intending to recover 4,500 for this financial year. First quarter budget was 700 crores. We did 851 crores. Yesterday, we declared. So we are on that path. So it works both ways. Like we have to stop addition of fresh NPAs. Slippages has to be controlled, and whatever has slipped, we need to recover. And there are many recovery tools. Both are working very fine, and our GNPA ratio is 1.97%, less than 2%, and net NPA is 0.32%. In absolute terms, net NPA is 800 crores only, which is less than the quarterly net profit which we declared yesterday of 1,111 crores. 97% plus is PCR. Almost entire NPA portfolio is 100% provided for. So there is no stress on that front.
So now coming to MSME segment, because government has been also very active bringing all the credit guarantee schemes, and a lot of improvement has also been witnessed in this particular sector. Definition has also been changed, and financiers, specifically the banks, are also very active in this particular for this particular segment. So would you like to share that how much credit IOB has been, deploying to MSME and priority sectors in the last financial year? And what is your vision for this particular segment? Any specific plans or any separate, way to, that you would like to take them ahead for this particular sector?
See, MSME and retail has been the core activity of this bank for last many years. We have been very strong in MSME lending, and almost all branches they do MSME lending very, very aggressively. In addition to that, there are many Government of India sponsored products also which come under MSME, from Mudra Yojana to Swanidhi to Vishwakarma. A lot many schemes are there, and in those schemes, guarantee cover is also available, and it gives lots of comfort to the branch managers. And the beautiful part is that all these loans can be sanctioned by even a scale one branch manager sitting at a rural center also. It's well spread, and these products are very much in demand. MSME, we have been growing consistently. It has been our focus, and at personal level also, I believe that if nation has to grow, employment has to be generated, then MSME sector has to be supported. And we recently introduced a model, credit assessment model. We call it eGST, based on the GST returns and all. Up to 50 lakhs automatic sanction within 12 to 14 minutes. After uploading all the documents, it happens digitally. The first question you are asking about digital. So this is the new addition in the whole list of digital activities. So MSME has all along been the focus. It is the focus, and we intend to grow in double digit, 12, 13, 14% of MSME growth. And the best part is that all my branches, 3,300 plus branches, they all are contributing to MSME.
Great. Thank you for sharing all these numbers, sir. One another important thing that I would like to understand from you is like what step IOB is taking to improve your operational efficiency, and what has been the cost to income ratio for IOB at this point of time?
Yes, cost to income is around 44%. Last year it was 51%, and last year it was on the higher side because of salary area payments and all. After that, lots of efficiency are brought into the system. The business per branch, the profit per branch, that has been improving. And in all areas of operations, wherever leakages were there, wherever we could think of ensuring that efficiency can save money, which includes the HR activity also, redeployment of persons also, opening new branches, some merging some branches. Lots of activities we have been doing on a consistent basis, and because of that, the cost to income it has improved, and of course profitability has improved. That is there. And going forward, our intention is to bring it further down to around 40%. We are working on it. Some strategy is there. Plan is yet to be implemented. I hope we should be able to do it.
Great, great. So now coming back to the digital aspect, the topic with which we started this conversation. So how has you seen increase in terms of digital lending for Indian Overseas Bank, and what is your share in terms of digitally secured loan? And any new product or any new tools that you are planning to deploy specifically for digital segment?
Yeah, as I said in the beginning, digital is every day. In fact, every day something or the other keeps happening. One data I will share with you. Out of total transactions, and this total transactions is in the number wise, volume wise, it is in crores. 98% of the total transactions across the bank is happening digitally. Across the counter, the people coming into the branch and doing transactions, that is hardly 1.5 to 2%. So 98% of the transactions, and all those are happening successfully. It includes UPI, it includes NEFT, RTGS, and all other ways of payments and remittances. It is happening digitally. So that is one part that itself conveys the level of penetration of digital activity and digital thought process into the system. Digital lending also it's happening. Exact numbers will not be readily available, but I can certainly say that the straight through processes where it is you feed the parameters in the system, and system itself calculates how much the person is eligible for low volume small value loans. That is happening, and that is not new. If you remember 3 years 4 years before, 59minutes.com, PSB 59minutes.com, one portal was created in which all PSBs were there, and there it was within 59 minutes loan was supposed to be sanctioned. That portal is also working very fine, and all banks are on that portal also. In addition to that, individual banks we also have done a lot many digital products, and going forward also we cannot say that we have reached the maximum. Every day is a new challenge. Every day some new concept, new thought process comes. The customer's requirement, their demand keeps changing, and based on that we are also very nimble footed to ensure that we remodel our products and services and deliver according to their satisfaction. So it's an ongoing process. I can say that we are investing heavily in IT and digital infrastructure. This year also we have allocated a budget of 1600 crores plus for IT and digital infrastructure to take care of all these requirements. And I can say that we are at par with anyone in the industry as far as digital lending or digital products or processes or infrastructure is concerned.
Well, sir, before we end this conversation, one last thing that I would like to understand from you, being the chief of such a leading bank, like leading public sector bank, sir, what cultural shifts that you have seen or are required in the public bank to embrace the innovation at scale? Because a lot of operational changes have also happened or need to be happened, and as you also mentioned that you have also invested heavily in the digital infrastructure and IT segment of at your bank. So what cultural shifts that you are witnessing and what more can be done in this direction?
Cultural shift means change of mindset has happened. People have tested the success, tested the convenience of digital lending, digital banking. Whatever used to take earlier 1 day or 2 day, it is happening in 5 minutes, 2 minutes. So all of them, everyone has tested. They have seen personally that yes, it is working. And unless until you are convinced, whatever you do from the top, it never takes off. So the persons who are actually going to implement and deliver at the ground zero level, they should be convinced. And we have been, I can tell that from central office, we have been very successful in convincing them by showing them the end result. That is one part. And regular interaction, training sessions, interactions, and there are so many within the bank, there are so many campaigns and competitions, some incentive schemes are there. So all these things taken together. In fact, all 21,000 plus employees, they are digital savvy, and the new generation, the new interns who are coming into the banking system, we are very aggressively recruiting them also. The new generation, of course, we know that they are tech savvy, and mobile and net, without net, they don't think that they are surviving. All these things, it creates a perfect mixture for us to take digital things forward, and it is happening successfully.
Well, sir, thank you so much for giving your valuable time and decoding a lot of crucial aspect in terms of digital as well as the number and the performance that IOB has posted. Thank you so much and look forward to have more conversation with you in the future.
Thank you. Thanks a lot. Thank you.